Welcome back. Lots to talk about with Jonathan Barratt and Atanu Mukherjee on what's happening with regards to steel demand, the outlook, impact of COVID, and what's happening on the export front. So let's in fact get into it. We've seen factory activity expand and iron ore prices in China also back up above $100. Jonathan, demand seems to be recovering, but we've only seen the economic and factory recovery limited to China for the moment. To what extent can this really support global steel markets?
Look, I think it's quite an interesting question there, but I think at the moment we've seen that lead by China, relatively good manufacturing numbers, and also that terrific demand for iron ore. Now, remember, China imports or consumes 70% of seaborne oil. So with iron ore at these levels, there's a flow-through effect because they actually see the demand in the economy. The key is whether the other parts of the sectors of the global economy can actually match. But at the moment, China is leading. And whilst China is leading, we are being quite optimistic, not just on iron ore, but steel and also some of the other base metal markets.
Atanu, Indian steel companies have been resorting to exports to offset some of that domestic demand decline. But as Korea, Japan come back to work, do you feel that they can remain competitive and become a more permanent fixture when it comes to the overall global dynamics?
India is exporting a lot of semis and some amount of finished steel into China and ASEAN and Middle East, especially driven by the demand in China. And a lot of it has got to do with the pricing, obviously. If you look at the pricing of semis and the billets, they have dropped significantly. If you look at the pricing of HRCs that have been exported to some degree, they've dropped significantly. So they're at a discount to the Chinese prices domestically. So I think as demand comes back up in India over time, and that's going to be a while, I would imagine that exports will decline. At the same time, I think you will see that there will be a little bit of waning off of exports in any way from the Chinese markets, depending upon how the global demand shapes out based on Chinese exports. So I think, yes, short term, there will be some exports. Long term, I think that the exports will wane. And I think the domestic market should pick up in probably 6 months' time or so.
Jonathan, how have you read into the sourcing diplomatic relation, rather the soaring diplomatic relations between China and the United States? Because the war of words just continues, especially of late. Countries like Australia, etc., and many other countries across the world as well are seeing the ramifications of this on the ferrous market, given that Australia is a big raw material supplier. Do you see this playing out?
Look, to tell you the truth, I'm actually quite disappointed with how it's all been panned out. In the days where we've got, an open economy or global economy, we're just seeing barriers to trade actually be put up by this tit for tat. Australia's just also received a concern of an 80% tariff on its barley going into China. So there are concerns there. So China's playing its hand. The US is playing its hand. But I think at the end of the day, we've really got to see how the economies, all the major economies in the world, need to see productivity occur. So I think at the end of the day, that will lead the market. The tit for tat, the political prowess, I guess, between everyone is just, I guess, more of a storm. But at the end of the day, I think productivity will lead through, and I think that's certainly the way we're seeing it with some of our commodity markets. Where we are seeing a pickup. So I guess that, yes, it's a concern. It's certainly a concern for Australia, who export a lot to China. But let's hopefully the two big guys, the US and China, can get together, resolve some issues so we can open borders and continue to trade.
Right. Atanu, just wanted to understand as well, what is the discount that Indian steel prices are trading at vis-a-vis their Chinese prices, and what do you think would be the reason for that?
So, right. At this point of time, if you look at, for example, the Chinese prices domestically because of the demand growth locally in the markets, typically HRC is about $420, $430. Indian HRC exports or semis exports for that matter is discounted about 20 to 25%. depending upon the time. And so there's certainly a discount at this point of time. A lot of it is because of the fact that there's no local demand in India. And so what producers are trying to do is to really cover the fixed costs to the extent possible and just keep the cash flow going till local demand picks up. So I think this will continue for some time. As long as Chinese, prices remain the way it is, depending upon the local demand. At the same time, as long as the demand side doesn't recover in India, which we think will happen over time, not shortly, but over time, probably 6 months, like I said. And then I think that the delta in terms of the discount of 15-20% or so will kind of like vanish, and I think you'll have more of local demand and supply prevailing in India rather than exports.
Right. Jonathan, if I could get you in here on the pricing, because iron ore prices have already topped $100. You've got steel prices, though, which aren't moving with the same pace, and that's largely, I guess, because of the raw material supply issues. Could we be seeing a repeat of the whole compression in steel spreads going forward?
Look, I generally hope not that is not the case, and I hopefully see steel prices to move higher. We do have an issue in terms of the supply of iron ore, obviously coming out of Brazil in terms of COVID and concerns like that, and I think that's a real worry, which is seeing the iron ore price higher. When I look at the margins, yes, we've seen margins not just in steel, but also margins in some of the other markets actually contract, and that is a concern. But once again, I think you see that depression or suppression just due to the outlook and how people are actually feeling about how robust any recovery will actually be. Hopefully that margin will turn around and it will become more profitable. But really, once again, we've got to see how the economies can pick up or how much negative news is out there and how we can discount it into a positive turn. And then we'll see those margins start to spread out a bit.
Jonathan, Atanu, both of you, thank you so much for taking the time out and speaking with us in depth about what's going on really with steel prices as well as demand. We'll let you both go on that note.